Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest. She is a politics, economics, and policy expert. He used to be special assistant to the President of the United States for economic policy and the National Economic Council, and former member of the U.S. President's Working Group on Financial Markets. She is currently the founder of DRPM Group. DRPM Group helps companies, investors, and policymakers better understand how risk and prices will move across the economic landscape. She connects the dots, brings together insights about markets, politics, policy, and geopolitics that signal important and investable trends. The clients of DRPM Group include many investment banks, fund managers, and hedge funds, as well as sovereign wealth funds, pension funds, global corporations, and family offices. It's an impressive bio from Dr. Pippa Malmgren. Thank you for joining us today on a Wall Street for Main Street podcast.
Thanks for having me.
Now, Pippa, I've heard your other interviews, and you have a lot of interesting comments about geopolitics, central banking, the economy, also entrepreneurship. Is it normal in different times in financial history for stocks, bonds, and real estate in major cities to all rise simultaneously?
No, it's not normal, but it has happened, and what's interesting is what drives it. I mean, right now what drives that is never in history have so many central banks added so much money into the economy simultaneously. And the normal outcome is this is to push up asset prices. That means the price of property, the price of stock markets, the price of food, for example, and we see all those prices rising. So, think about it this way. The purpose of quantitative easing is to force you to get your cash out of your bank account where it's earning nothing and put it into something risky. It's a way of compelling investors to actually put the money back to work to get the economy going again. And so it's, also supposed to create inflation, right? Higher asset prices is what inflation does. So that is what the central banks have wanted to do. That is what's occurring. And so in this sense, quantitative easing is succeeding.
Yeah, and it seems that the Keynesian endgame, or the Keynesian endgame as we have it, what Keynes wrote about in the general theory was that we don't like savers, we want to punish them. People who hoard and just hold their cash, they hurt the economy. And it seems the policy decisions, and not just from the U.S. Federal Reserve, it's this way in Europe now with basically negative interest rates on a lot of people in Europe. Japan, there's been disincentive for people to save. Japan has, artificially suppressed their interest rates, and we could, go on and on about other different countries. It seems to me the Keynesians in power running these central banks, helping run these treasury departments, are running out of tricks to try to force the consumer to save. To spend, to lend and spend. It seems like, as Keynesian evidence, with the velocity of money, which is basically the Keynesian framework to say that the economy is strong, we're not seeing that anywhere really globally, right?
Right. Well, let's talk about velocity of money. This is such an interesting concept. And just to be clear, because it's such a technical notion, what it means is the speed at which money is lent into the economy. So usually central banks measure that speed at which money is being lent into the economy by looking at bank lending. But we have a really interesting new phenomena, which is these crowdsourcing, crowdfunding platforms like Kickstarter and Indiegogo. And basically what's happening is people are able to take a business idea directly to the customers, float the idea, and get the customer to either buy it in advance or finance its creation. And so this bypasses the banking system. So I would argue that actually the velocity of money, the speed at which it's being lent, is higher than the official data shows because it's going from private hands into private hands while bypassing the banking system. And just to be clear, let me give you a couple of examples. A lot of the wealthy families that I've dealt with in the last decade, over the last 5 years, they have been very delighted to lend to businesses in the U.S. that had, good cash flow, good revenue, solid customers, but were too small for a bank to give them a loan during this period when banks have been very tight and only willing to lend to, huge blue chip companies. And the rate of return on those loans has been phenomenal. It's been like, I would say, initially, at the beginning of the financial crisis, it was like 30% per annum, and it came down to somewhere between 12 and 15. And that's usually on a highly collateralized basis. In other words, you get the company to pledge you, 3 big pieces of equipment that you now own if anything were to go wrong. So it's almost, you're completely covered. And this is an important development because, number one, if velocity of money picks up, then inflation will pick up, even if the central banks aren't measuring that accurately. And second, it tells us that money is making its way to where the profits are and that the economy can function without the traditional lending that banks normally do. And that sets a foundation for a very different future. But it makes me a lot more optimistic about the U.S. recovery than many people.
The technology sector has done very, very well. I think the technology sector has helped prevent the U.S. from collapsing. Besides the Federal Reserve doing these quantitative easing programs, the shale oil boom here in the U.S., it's drastically lowered the U.S.'s trade deficit, or otherwise it would have exploded. And then you have the technology sector, Silicon Valley, and all these different industries in the Silicon Valley. It's improving old industries. You have Mark Andreessen talking about software eating the world, and it's going through all these old stodgy industries and improving them. And then you have new industries that are being created through the technology industry, and that's interesting. You brought up Kickstarter and Indiegogo. I think Indiegogo is more for private companies. We're actually listing on Indiegogo soon. It's a very interesting and creative concept there. And I've never heard anyone else actually bring up that the velocity money wasn't being tracked that way through that hand. So that makes quite a lot of sense to me. But yeah, I mean, the U.S., just the value from a value creation standpoint, I mean, we just still probably have the most entrepreneurs in the world. You travel all over the world. You live in London. Do you see as many entrepreneurs maybe concentrated in an area as much as the United States still has in Silicon Valley?
No, I have to say, the U.S. is the epicenter of innovation. But I want to pick up on a couple points you said. One of them is we should be very careful not to assume that innovation is only about technology or that it's even about the whole Silicon Valley story, wonderful as it is. And I would also point out Silicon Valley is fast moving to Austin, Texas, partly because the taxes in California are going through the roof. And so I would say Austin is now the new epicenter of the high tech in the U.S. But the story goes so far beyond that. And so I have to spend a lot of time looking at manufacturing, old-fashioned, plain vanilla, nothing super high-tech, things like, Wham-O, the company that makes hula hoops and Frisbees. They have moved their production in the main. They've moved it back to the United States. Companies that make textiles and fabric and shoes, knitwear and yarn, they are moving from China and Bangladesh back to the Midwest of the United States. There's a very powerful phenomena that's occurring way beyond high tech. It's much more general, and it has to do partly with the way Americans are so quick to change the way they do things, to get to the bottom line that makes sense, to discard anything that isn't generating cash quickly. But it's also a function of the fact that emerging market workers are no longer prepared to work for nothing. And the fact that their grocery bills are going up is making them say, wait a minute, I need to earn more. So they're making big wage demands, and the narrowing of the differential between what it costs to hire an American versus what it costs to hire an emerging market worker has narrowed. I mean, hugely narrowed. And then when you add to that these new funding mechanisms like Kickstarter, Indiegogo, and the fact that private capital can find interesting and really profitable investment opportunities, you put all that together and suddenly you have an amazing picture. So when I go around the world in the last 5 years, without a doubt, the number one favored location for investment money has been the middle of the United States. And 5 years ago, everybody was like, are you insane? I mean, who would want to invest in the Midwest? And I'm like, you know what? Every international institution can see that the innovation efforts in the United States are going to happen first and fastest of any other part of the world. And I think that's proved to be true.
Yeah, and I think that's allowed the U.S. to continue to not collapse or have any problems. There is the fact that they have the cheap energy. The labor prices, like you mentioned, have gone up. I believe the labor prices in China in the last decade have gone up 600%. Yes, they start off at a low base, but they're not cheap in quotes anymore compared to the rest of the world. And especially when you add in the fact that China now has much higher energy costs than the U.S. The U.S. has much cheaper natural gas for chemicals plants, much cheaper natural gas for plastics and other petroleum products, and that's a huge advantage. And then you add in the fact that the U.S. has other technological innovations like 3D printing and robotics, how a lot of factories are advanced now here in the U.S. You don't need 5,000 humans at a factory anymore. You need 500 or less, and a lot of them are, more highly skilled, specialized jobs that are repairing robots or helping with other software programs or algorithms or things like that to help in the manufacturing process.
Well, and I think, that's true. By the way, I would set aside the energy issue. I think it's really interesting how this perception that the U.S. has unlimited cheap energy has really rooted itself in the world economy now, and I'm not sure it's actually true yet. I think it will be in a decade, but right now we just hit an all-time record high for electricity prices per kilowatt hour in the United States. It's not that all energy is cheap, and many companies and production facilities aren't connected to natural gas. That's one of the reasons natural gas is so inexpensive. It's not because there's so much of it. It's because everybody knows you can get it out of the ground, but you can't get it anywhere. You can't get it to the coastline. You can't get it to the end user. So the local buyers all say, well, I'll pay you $3, but I'm not going to pay you any more, and good luck finding another buyer. In other words, the reason the price is low is not the plentifulness of it. It's the inability to move it. And I wonder whether once the transportation grids are put in place, that the pipelines, whatever, that lets you move it from A to B, whether the price might not go up. But nonetheless, this perception is important that America's got cheap energy. It's really a big deal, and it makes people say, actually, I'd like to move my production there. Also because you save money on the shipping costs. Now if you move stuff from, Asia, Africa, any emerging markets, you've got to take into consideration not only the price of oil, but you got to take in the price of the time it takes. And actually, if you can produce it in the U.S. as cheaply as you can abroad, then why not? You would eliminate those costs. And that takes us to the last point I wanted to touch on that you mentioned. So yes, it's true. The new manufacturing in the U.S. is very high tech. And yes, it does require people who are good at algorithms and can deal with computers. And this is a very fundamental problem because we basically have almost two economies in America today. There's one that I think suffers from inflation, where highly skilled workers are getting somewhere between 10 and 30% pay rises each year because they're so valuable and there aren't enough of them. They're creating fantastically efficient outcomes. And I'm an optimist. I think for every robot you buy, you actually create 4 new jobs. We can have an argument about whether that's true or not. But the other part of the economy are the people who don't have the skills and are considered by many businesses virtually unemployable under any circumstances. So suddenly you get a split United States. One economy is moving fast, and the other economy isn't really moving at all. And that brings all kinds of social and policy consequences.
Yeah, that brings the haves and the have-nots even more than the last 5 years. It's very obvious what's happening with technology. It's accelerating. We have computing power over the last decade. It's basically gone to an exponential function, and the computing power that's increasing. I mean, now we hold basically a supercomputer 12 years ago. It's in our hands in a smartphone, and that's basically helped allow the software programs for apps and algorithms and things like that. And the amount of skills required, it's a very great point that you brought up, and I've talked about this on other interviews that we've done, the science, technology, engineering, mathematics skills that are required to succeed in this advanced economy that the United States has. I mean, there are jobs available. It's not a lot of jobs available, but there are jobs available, but most of them require advanced skills that a lot of the workers in the United States don't have, and they're going to need to be retrained and go back, and, it's not going to be an easy transition for people, but, I mean, the incentive is there for people who do want to learn to go and get the higher paying jobs.
On this subject, I have such strong views. As I was writing my book, Signals, which is very much about these issues, And by the way, I'm launching it on Indiegogo, which nobody's ever done a finished economics book on a crowdsourcing platform. But I decided, I can't be writing about innovation and then not do it myself. I can't expect people to engage in calculated risk taking and then, not do it myself. So I looked at this question very closely, and here's my conclusion. We do not need to train all these people to have PhDs in mathematics or, computer science. I think the key is we need to reintroduce into the junior and senior high school system what we used to call, when I was a kid, shop class. Shop class is where you learn how to weld metal and sew things and repair motorcycle engines, and it's the stuff that's practical, everyday skills. And the reason it's important is because, first of all, if people, listen, take a 15-year-old boy who's trying to get his license when he's on the day he's 16, nothing is more motivating than knowing if you can get the motorcycle engine to work, you can use it. And as somebody learns the physical properties, they become more interested in the math. The math serves a purpose, whereas trying to teach somebody math in a classroom in a highly abstract way, I don't know, it didn't work on me too well, and I don't think it works on most people. And everybody forgets that Einstein, as a young kid, had a couple of uncles who ran a repair shop, and he spent all his spare time hanging out in that repair shop, and they would hand him stuff. Here's a toaster, fix it. Here's a radio, fix it. And from playing with real things, it informed his knowledge of math and his later philosophical views about how the universe works. So I think also the real economy always needs these skills. And I'll give you a couple examples. Here in London, I was talking with a woman recently who runs one of the world's most successful dressmaking companies. She makes, Beyonce's stage costumes. She makes all the outfits worn by royal families around the world when they do their state tours. It's super high-end stuff. And she says, look, everybody says they want to be a designer, but nobody knows how to actually sew. I need people who can stitch, who really understand the physical property of how to put fabric together. And I will pay for that. I will pay a lot for that. And I think that if we were to reintroduce these kinds of skills, we might more quickly overcome the problem that we're talking about. And this would be a very different approach than trying to get everybody up to, the level of math that somebody who's a physicist requires. And it would actually generate a lot more innovation. And what we need now, we've got so much innovation in software, but we need more innovation in hardware, physical things, and not computers, but just stuff. So that's my conclusion. I personally think, it's crazy. I have a PhD, but if the tap is leaky, I have no idea how to change the washer. I mean, how crazy is that?
Yeah, and then you got to bring in a plumber or an expert, and it's going to be, $50, $100, $150 an hour. I get your point. I think we've gotten so specialized lately that, we tend to forget the basics about what's required in life. I mean, my dad is just a very handy person. My dad is a retired orthopedic surgeon, but he also worked a job, in college as a plumber, and he drove a truck. Part-time, in college and before college and things like that. And he's done a lot of other jobs. He's very handy. He knows how to repair cars. He taught me a decent amount of stuff about that. And, I guess of prior generations of Americans and other people used to be able to do a number of these skills on their own. They used to be more self-sufficient. But somewhere along the line, I guess we forgot that. Maybe Americans nowadays, Pippa, are too busy watching reality TV and, spending all their extra time, if they have any, instead of just putting food on the table, they're spending all their extra time watching reality TV instead of learning useful skills. Yeah,
I don't know. I think part of it is that when we were in an era of great prosperity, there was this belief that everybody needed to go to college and prepare to be a white-collar worker. And, now that we're in not so much prosperity, it's forcing people to shift. The other thing that's interesting is that, during most of my lifetime, Wall Street and the financial markets paid so much more that anybody with talent gravitated in that direction. But today, this has all changed. In fact, there was just a survey that came out a couple days ago showing that The highest salaries paid to college graduates now are going to the colleges that focus on practical skills. So the Colorado School of Mines, the South Dakota School of Mining, places that teach you, real hands-on stuff. They are paying more than Harvard Business School graduates. And this is a really important development. It means the real economy can now not only compete with Wall Street, it can win. And it will draw people away from Wall Street and financial markets and back into the real economy, and in surprising ways. I'll give you an example. I know a guy who used to be a equity broker at one of the big Wall Street houses, and he lost his job like so many because Wall Street's going through a bit of a cull. It's going to be a lot smaller than it used to be, so people are forced out of the business. So I said, "Great, what are you doing instead?" And he was really hesitant to tell me. He's like mumbling. I said, "Oh, come on, tell me." And he says, "Well, I'm in sewage." And I said, "Sewage, excellent. If there's one thing for which there is a genuine need and a genuine cash flow, it is dealing with sewage. Tell me more." And it turns out his best buddy owns a sewage company inherited from his dad, and he needed help. He doesn't know anything about finance. So he brings his buddy from Wall Street in, and the next thing you know, these guys are scheming about acquiring some of their competitors and how they're going to build a kind of company that can be taken to an IPO. And I'm like, this is an excellent development. This is exactly what I mean by innovation. This guy is brave enough to go from being a Wall Street, money jockey to working in the real economy in a particularly dirty, tough sector and transforming it, bringing his financial skills to bear on it to build something that's more efficient than before. That is what the United States is so good at.
Yeah, and the United States, like the whole history of capitalism and starting the stock market, Wall Street used to before now it was doing high frequency trading and crazy derivatives bets and things like that could blow up the whole economy. It used to provide capital, real life businesses, and the whole point of Wall Street, right, was to allocate the savings of Main Street people to productive Main Street businesses here in the United States and help grow the economy that way. So there's GDP growth or other productive growth, new products and services, and provide jobs. That's what used to. And it sounds like maybe we're starting to get back to those roots now that the financialization of the economy is maybe starting to, people are getting wary of it. Wall Street's cutting back or moving to other countries and things like that. So I'm very excited to hear you name examples that maybe the productive part of finance where it's helping Main Street grow productive Main Street businesses is starting to come back.
Yeah, and I think it really is. And that's why, as I travel the world, I hear international investors say, I want to be part of that. This thing is on fire in the U.S. in that sense. Now, the aggregate numbers on the economy are still very weak, but investors don't really care about the aggregate data because data lags in the first place. In the second place, they don't care about the average. They want to find the specific investment that's going to give them a good return. So the interesting thing is profits are definitely occurring. They're leading in the United States. And I think the real economy gets dragged up behind it. And I will go even further and say that when I look around the world, I quite often am asked by young people who are 18, 20, 22 years old, and they ask, my advice, where should I go? And typically they think where they ought to go is China. Should I go spend a few years learning about China? Should I learn Mandarin? And I say to them, if I were your age today, when I look around, what I see is the most dynamic economy, a place where you are guaranteed to make money, it would be Texas. And strangely, I'm not from Texas. I'm not from the Midwest. I'm from, Washington, D.C. and Los Angeles and grew up, with that old opinion that the middle was the flyover zone. I used to be a dreadful snob about that. And then I learned, actually, this is where the action is in the U.S. economy. Texas today is very interesting because there's so many different industries that are doing well. It's not just Austin and the new Silicon Valley there. It's not just natural gas. It's also, for example, oil. So, your listeners may or may not know that the new president of Mexico has said that he's going to open up the Mexican oil industry to foreign investment for the first time ever. And he's already announced they're going to build 5 new refineries, probably about an inch and a half off the U.S. border. And by the way, the U.S. border is so foggy these days, it may well be on our side of the border at this point. But at any rate, because, we can't build any new refineries because of Environmental Protection Agency rules, for better, for worse, that's the situation. So he said, let's build some new refineries. That way we can take the messy, heavy crude that's in the Gulf and actually process it, because modern technology, as you say, where you can put a defense lab in an iPad, you can now process that stuff more efficiently. And that actually provides jobs and growth for both Texas and Mexico. In fact, the whole Gulf oil producing area benefits from that. And it will help reduce the cost of energy in the U.S., not in natural gas, but in oil. So that's another part of the story. I think medical research and medical healthcare advances coming out of Texas are phenomenal. Agriculture is a huge story there, and agriculture in the U.S. is, in the main, doing extremely well. You've got some issues around the drought, but fundamentally agriculture. So many, many different areas. So I think, the middle of the United States is definitely surprising everybody.
That's a great point. Now, in the last couple of minutes of the interview, Pippa, you have your new book. I believe it's out. It's not on pre-order. Can you tell our listeners, give them a summary about the book, and maybe they'll be interested in buying it?
Yeah, sure. So this is my first book, and what happened was I worked in the White House. I worked in the markets, and in 2007, I thought, we're going to have a big catastrophe. I sold everything I owned, including my house. I put my family in rental accommodation, and then I watched all my friends get run over by this huge crisis. And I thought, I've tried to explain to them why this is going to happen, and why didn't they believe me? Why do they believe that their house will definitely be worth another, huge amount of money in 6 months without even a coat of paint? And it was partly because I thought, well, they don't really see the signals that I see. So I decided to write a book called Signals, about things in everyday life. You don't need to read, the Wall Street Journal or The Economist. You don't need a PhD in economics. You can just observe. And so some signals today are very interesting, like, we've just hit an all-time record high in the price of beef and dairy and butter and milk. Well, that means when you go in a restaurant now, the size of the steaks is smaller, but the price of the steak per ounce is much higher. And this kind of shrinkflation, as you are asked to pay the same price, but what you get is smaller than you used to get. This is a precursor to inflation. And so that's a signal you can see with your own eye. And I give examples like, fashion magazine covers send us signals. The events we've seen with Russian fighter jets getting into, near scrapes with American spy planes, Chinese fighter jets, and the new Chinese aircraft carrier getting into a near miss with the USS Cowpens. These are not random coincidences. They are also signals, and they are caused by exactly the same thing. The emerging markets, they basically think the U.S. is choosing to inflate its way out of its debt. This is going to push up food prices. That's painful for their citizens. They start to not only ask for higher wages, and that makes them less competitive, moves the manufacturing back to the United States, and leaves them saying, wait a minute, we got to feed these guys. So the South China Sea, where 10% of the world's fish supply is, I think that belongs to us, and we're going to go for that. Or the Russians, when they look at Ukraine, the 4th largest food supplier in the world, when it says, we're thinking about joining the European Union, they're like, maybe not. That's a valuable asset. So I've tried to explain signals and how anybody can see them. The current signals we have, which I think tell us there's more inflation than the official data tells us, and there'll be social consequences and geopolitical consequences. And I conclude by saying, but the answer is innovation. And that is where people are building the economy of tomorrow today. And I think they are doing that, and we can be very excited about what's coming.
That sounds like a great book. Is it going to be available on audiobook?
Yeah, actually, I start recording it on audiobook next week. And I'm actually doing it. It's an unusual story. Like I said, I'm launching it on Indiegogo, which is basically I'm busting the traditional publishing model. And because this has never been done before, and I'm issuing it in several different versions. One's the hardcover you get in snail mail. One is the ebook for Kindle or Apple iPad or whatever your format is. One will be the Audible version, but one is a digital version. And digital means what I'm going to do is for the next 2 years continue to tell the story. So I will tag new stories to old chapters. So I'm not rewriting the original book, but rather continuing the conversation with the readers about what new events are occurring, what new signals are out there that we should be thinking about. And I'll invite the public to join in the dialogue because, the public sees stuff that I don't see. Like, if I can give a little example, last week there was an interesting announcement here in the United Kingdom, a box of shredded wheat that you eat for breakfast. The size went from 520 ounces down to 470. Grams. Apologize. 570 grams down to 470 grams, but the price stayed the same. And meanwhile, the price of milk's gone up. Now that is an important signal. And so I really love it when I'm in a position where the public can begin to show me the signals they see. And that's part of the purpose of that digital version of the book, which, again, I don't think anybody's really done that before. I'd love to see if there are any other examples, but it's not the traditional way you publish things.
Yeah, and the old traditional ways being gotten rid of, and they're not giving that big of advances unless you're a really big name. So I think you're very forward-thinking. If you want to be further forward-thinking, Pippa, you should consider taking some Bitcoin then in exchange, accepting Bitcoin too, and then maybe just hold on to the Bitcoin as a speculative position because I think that's a pretty amazing innovation as well.
Well, in fact, I write about Bitcoin, and I explain that in a way it's like gold. It's a way people exit holding fiat currency when they're worried that their government is going to reduce the value of the dollar in your pocket. It just buys you a smaller stake going forward. That they want to hold something else that will retain its value. And there are lots of other things. Diamonds are one. Gold is one. People think property can play that role. Warren Buffett's view is you want to own companies that have the ability to pass on the higher cost to the customer. In other words, you want to own margin power or pricing power. And I think actually another thing you want to think about is maybe the best way to get in front of these forces, inflation and deflation alike, is investing in yourself, in your own personal skill set to improve your ability to generate cash going forward. And so Bitcoin kind of represents that desire to exit hard currency. But there are lots of different ways you can exit that will give you more profitable outcomes.
Those are great points. And, I tell my paid consulting clients that if they don't have enough money to invest and buy different types of asset classes and learn to invest, the best thing they can do is invest in themselves, add skill to grow their income and or start their own business or learn to be a passive investor, maybe in a business off exchange or something like that. I think it's a very valid point. So in wrapping up the interview here, Pippa, we didn't get a chance to talk about geopolitics, but hopefully on the next interview we'll get a chance to talk about that. I want to thank you again for your time, and please tell our listeners where they can find your work on your website.
Yeah, so the first thing is I do quite a lot on Twitter under the handle Dr. Pippa M for Dr. Pippa Malmgren because nobody can spell my last name. And if you go to pippasignals.com, Pippa signals.com, that directs you to where you can register and we'll tell you when the book is going to be ready, which is probably in about 3 weeks. And then it'll be on Indiegogo. And then it will be launched on Amazon after that. So it's 3 weeks or a month away. Not so far.
Yeah, I have friends who have written books. You must be pretty busy right now with the editing part of it, unless you outsource that and are hiring other editors, not doing as much editing work on your own.
Yeah, no. I did hire professional editors, and in fact, it's already started getting reviews. I've had some really wonderful reviews, which is great. James Galbraith, the famous economist down at the University of Texas, has said it's better than Piketty, which has been the best-selling economics book in modern history. So I was delighted with that. And the former British defense minister wrote that it was a really important book for understanding geopolitics. And so I got quite a few really high-powered, good quality people who've read it thoroughly and they've come away saying this makes sense. So I feel pretty confident. It's good. I'm fun. It's been fun.
Okay, well, you sound very passionate about it, and I'm excited to read it when it comes out. I'll probably buy it on Audible. My attention span these days is I'm 32. I'm almost 32 years old, but it's decreased to the point where I'm trying to build my own business, and it's growing pretty rapidly. That I don't have time to sit down and read as many full old school books as I used to in the past. That those unabridged audiobooks are a real beneficial thing to me. I've just been able to read so many of them given my time schedule, and they're more efficient, and it's just easier than to sit down and read, crank out. I'm not a speed reader.
Yeah, no, I think everybody feels the same these days. They want to listen to it in the car, on the way to work. And and I decided to read it myself because, I think people want to hear an authentic story and an authentic voice. And one of the reasons I decided to do it on Indiegogo this way is because I realized also, publishers think that the general public find economics boring. And usually it is gray, boring. It's all about math and numbers. But it shouldn't be. Economics is cool. It's sexy. It's really interesting. And so I want to tell that story in my voice using all kinds of examples that are unexpected, like perfume and Formula One racing and, things that are not what you think of when you think of economics, except they are.
Yeah, Freakonomics had a lot of success telling the story about that through behavioral finance and things. It was very popular telling stories the same way. So I want to thank you again for your time, Pippa. We didn't get to cover all the topics, and hopefully I'll have you on again soon, and we can talk more about geopolitics and the other global central banks and things like that.
Great. Thank you so much.